Guys, welcome to um, the next class, the next teaching on understanding the market business model. Um, I want you to know that this, the purpose of this class these classes I've been hosting with you guys is to help you properly build understanding and start making money from the market. That's our end goal. Okay, all this up and down that we have been doing, what is liquidity, what's volatility, candlestick, etc., etc., we are trying to eventually be able to read price, and through our reading of price understand what price is doing, and then we'll now convert this thing to making money in the market. The knowledge that does not gives you money is a knowledge that is wasteful as long as this forex market is concerned. As long as you're not making money directly from this market, whatever you want to know, whatever you want to know, it's a waste. Now, I understand that for some reasons it will take people, it takes some of you a lot of time. For some of you, the moment we are done with the teaching, you start making profit from the market. For some of you, it will take a little while, the time span and everything. For some of you, there are other life activities that is going to come into it and make it long a little bit for you. But the point is that at the end of the day, whatever you do, at the end of the day, the results remain similar for everyone who is patient enough to follow up this teaching, this lecture from when I started it till now. Okay. So, like I said, the market business model covers a thought process, the thought process of a profitable trader, and how it covers the thought process of the business aspect of the market. How do we do business in this market? If the smart money guys are the one that is currently, moving the market, how do we make business out of it? If you believe it is smart money, how do we make money from it? If you believe it is dump money, our business as market business model trader is not to believe in a concept or to follow a theory, a belief system of who or what is controlling the market. We don't care about who is doing this market. What we care about is what are these people doing, or what is the entity doing. The what is what we are looking at. So understanding of principles of the what helps us to nullify the who. We don't care who the smart money are. We don't care who the dumb money are. We don't care who is in supply, who's in demand. We don't care those things. Our purpose, our concern is our concern, our focus is on how can we make money out of it? How can we do business? And the side of business is profit making. That is the end goal of every business. Okay, so that's why the market business model at the end of the day drives you towards making profit. It's profit making at the end of the day. That's the goal of every business. So whenever a business wants to buy, a business tends to buy cheap and sell expensive at expensive price. And this is basically what we are driving to. But you see, for this forex market, because of the fact that we lack a lot of information, lot of things, lot of vital informations, like how to be able to read what exactly is happening in the market. The only thing we are presented with are technical illustrations. Yeah, these are the only things we have, and these technical illustrations are also limited. So, and we need to make money from this market. So what do? We now use our sense, we use our head to craft out a profitable approach to understanding this market through the market business model. And so the market business model like takes you into the chart and explain everything that is happening to you, so that eventually when you buy, market goes your, when market is about to buy, and then you buy, and where market is about to sell and you're about to sell. Another advantage of trading MBM is also that you are able to enter very early and very cheap, or you enter very early and very, or if you are buying, which means you are bidding, you are able to bid at very cheap price. And if you are selling, which means you are asking, you're able to ask at premium price. That's where you are making money, enough profit. So we'll dive deep into the last class we held. I spoke about candlestick. As you can see, some of the notes are still on my screen. If you have not watched it, please go back to MBM 013 to watch it. I think I started talking about candlestick from MBM 012. But the point is, try to watch all the videos. It will help you. Okay, to help you understand what exactly is happening in the market. Okay. So in this class, in this, I think this teaching will be a little bit brief, because I'll be speaking about what's it called? I'll be speaking about, you see this candlestick that I explained to us in the previous lecture. Let's zoom into it. Let's go deep into it. Let's understand how orders plays around this price point. Remember, I told you you cannot understand MBM fully if you don't understand order flow. Now, I'm not going to teach order flow as a singular topic. I might, but chances are I might not. Reason is because it's spread across these topics. I found a way to spread them so that it does not become complicated. Okay, so we need to understand how orders. Remember, orders that comes into this market are in form of transactions, yeah, and these transactions are what builds up your, what's it called now, your candlestick. What I'm trying to say is, based on what I've taught you so far, when an order comes into the market, it just comes as an order. Okay. When that order matches or pairs with an opposite order, so let's say there is a bid order and it pairs with an ask order, it becomes what? A transaction. And that transaction are what makes up your candlestick. So how does orders play around the candlestick? How, let us zoom into how price plays around in, because your transaction is what creates price. So when I mention price, I'm also talking about transaction. So for now, I'll just be talking price so that you can understand. Okay. Now, how does price play around these 4 points? The open, the high, the low, and the low and the close. How does price play around them? Remember, like yesterday, I told you that it doesn't matter the color of the candlestick. What matters is the opening and the close, the price point. And I told us how to identify them. But that's not what we are dealing with today. So today we'll be talking about what happens inside a candlestick. What happens inside a candlestick? Let's zoom in. Let's know what is, how does it play out? And how do we narrate or interpret these things as traders? And how does this help us understand what to do, how to make decisions in the market? Every candle that opens, remember the rules of candle. So we are going deeper into understanding it. By the time we are done understanding a candlestick, then we can now move deeper into, other MBM, concepts you get. Now, every candlestick opens. Now, for a bullish candlestick, for a candlestick to close higher than it open, it will need to create a low and a high. Now, in some scenario, it will not create a low, it will not create a high, or it might not create a high, or it might not even create both. Yeah, in some rare scenarios. But typically, this is what a candlestick does. In a bullish scenario, when a candlestick open, we anything below, in fact, let's take it this way, okay? Before I go that route, let's do it this way, so that you will not be confused. Let's start with, before we go into that, before we go into that, I don't want to confuse you. Okay, that's the reason why I had to stop that for now. I'm still going to come back to it, but by the time I'm coming back to it, you will understand how they all correlate. Now that I've explained what a candlestick is and the rules, the next thing we need to understand is something we call time frame. You see, time in the market is very essential for traders because this is when we know it answers the question of when. When are we to buy? When are we to sell? Okay, when are we to engage the market? But principally in the market business model, we only use time to know when to do when we should start engaging, not when we should start what's it called? In the MBM, we use time as, how do I explain this now? We use time as interest. Okay, time is our it's interest. That's when we have interest in the market. That's when we want to know what is happening in the market. Okay, but that's not when we engage or trade in the market. Time is just for us to come and start looking at what is happening. Okay, so let's proceed. What is time? Time in the market is um um it's essential. I mean, it's what everything in this market is built upon. Okay, but then our focus is on time frame because basically that's what this market works on. What does time frame mean? Time frame means the starting point and the ending point of a candlestick. That's what we call time frame in MBM. Okay, because our focus is on candlestick, yeah, and a candlestick shows us price, and price is what we are looking at. So we find a way to correlate everything. Okay, time frame means the starting to the ending point of a candlestick. So if I tell you that from 12 o'clock to 3 o'clock, that's 12 a.m. to 3 a.m., I'm only telling you that this is the candlestick. So whatever happens inside this time frame, yeah, is what I am referencing. If I tell you from 3 a.m. to let's say from 3 a.m. to let's say um 9 a.m., yeah, 3 a.m. to 9 a.m., that is another time frame. Now, in this market, time frame are very, very much, and there are a lot of them, a lot of time frames. Okay, but our focus is on how this time frame can help us as traders to know what to do, when to do these things. It only explains the when, not actually the what, but combining everything together helps us understand it better. So let's just proceed. Now, every candle has a time frame. Every single candle has a time frame. So from when this candle opens to when it closes, it is inside a time frame. It could be from 1 o'clock to 2 o'clock. I mean, from 1 o'clock to 2 o'clock is what? That is 1 hour, right? So we can call this candle a 1 hour candle or a 1 hour time frame. Okay. If this candle starts by 12 a.m. and closes by 6 a.m., we call it a 6 hour candle. A candlestick time frame does not have rule. It could start from any period. It could start from 1501 to 1009. It will start from 1502. It will start from 1202. It doesn't have time frame. It can start from anywhere and stop at anywhere. Start from anywhere and stop at anywhere. But the point where it starts to where it ends is it will create a candle. Okay? That is what we focus on. That is what we reference as time in the market business model. Now, time is a factor for price. Okay. In fact, you see this time frame, yeah, they are what creates, they are what, this time frame now, we use them for guidance, for understanding when volatility, in fact, time volatility and so many other things. But the effect of time in price is actually very minimal. That's why I don't think time is a very complex subject like that, except if you want to go into you know other things, other factor. But time is still subject to change. But when we talk about time frame, we are referencing a candlestick. So whenever I mention time frame, let's say from 1 o'clock to 2 o'clock, I'm talking about a candlestick. Now, if I say 1 o'clock to 2 o'clock, I am saying this candle opens at 1 and closed at 2. So time frame only reference the open and the close of a candle. It does not reference the high and the low. The opening price is where the candle is opening from. The closing price is where the candle is closing at. The high and the low price, we'll talk about that one. Now, how does this now help us understand how a candle operates? Now, you see, in this market, there are fractality. Fractal means that, you see this box that I draw here, there is a similar, if we go lower to, let's say we remove this box, under this rectangle rather. Now, if we remove this rectangle, under this rectangle, we can find similar rectangle. Okay? And under this same rectangle, if let's say we remove this big one, we'll see a similar rectangle. If we remove this small one, this other one, we'll still see other rectangle, and we'll continue to see that kind of rectangle similarly till infinity. It's more like repetition. Okay, that's what fractal mean in market. So this market is fractal. That means you see this candlestick that you call 1 hour. There is a way it works to eventually add up to become 2 hours, to eventually add up to become 3 hours, to eventually add up to become um, um, 24 hours, which is one day, and eventually add up to become 1 week, 1 month, 1 year, and so on and so forth. Okay? Now, how do they add up? How do they add up? And how do they relate to time? You see, if my candle opens from 1 o'clock and close at 2 o'clock. Remember, when we're talking about time frame, we're only looking at opening to close. We're not looking at high and low. Now, when my candle opens at 1 and close at 2, that is 1 hour time frame. And then the next candle opens, let's say at 2, which is, of course, the next candle have to open at, remember the rule of candlestick. The rule of candlestick states that wherever this candle close, this is where this one will open, right? Good. So let's imagine that when this one closes at 2 o'clock, this one immediately opens at 2:01. And what happens? Or yeah, if this one closes at 2 o'clock, this one is opening at 2 o'clock. Yeah. So what happened? It started selling. And then this one now closed at 3 o'clock. So from 1 to 2, 1 hour. From 2 to 3, another 1 hour. 1 hour plus 1 hour makes 2 hours. That means if you go to 2 hours candlestick, yeah, you'll be seeing the combination of these two time frame. Yeah, you'll be seeing the combination of these two time frame on a singular representation. It will be represented as one candle. But remember, we're talking about time frame, 2 hours. So we are referencing only the open to the close. Now, the question you will ask is, Max, how do I know how do I know what's it called now? How do I know which the way this candle will form? How do I know okay, how am I sure that it is this one plus this one that made formed this one? And that's where we are going to. I'm going to explain that. You see, remember I told you that the color of a candle does not matter. And now I'm also telling you that a 1 hour candle plus a 1 hour candle on the 2 hour time frame will give you a singular time frame, which is combination. So this plus this equals this. Okay? Let me just do it like this. Don't know if oh god this good. Hope this works. Okay, so this plus this equals to this. So 1 hour time frame plus 1 hour time frame will give us 2 hour time frame. 1 hour candle plus 2 hour candle will give us 1 hour candle plus 1 hour candle will give us 2 hour candle. Let's explain that. Now, how? Because I mean, how will this candle turn out to be? And we need to set for us to understand how this candle will turn out to be. We need to separate these two candles. This candle, let's of course, from the look of it, we can say that this was a bullish candle. Why? Because it opened here, closed here. And how do we know it closed here? Because this one started here, right? This is the open and went below this level. Okay. Now, please pay attention. When this candle opened here and it closed here, and this one opened here and closed here, we need to do a subtraction for us to understand this. Remember, this was a bullish candle and this was a bearish candle, right? Good. So if we overlay these two candles, it will give us this candle. So let's try to overlay them. Like overlay, that means we add both of them on each other. So let me try to. Now, please notice the rule for combination of candle is that if this candle is bearish and this one is bearish, it is, and this one is bullish rather, it is subtraction. You are minusing. So when there is a bearish candle and a bullish candle, we are doing minus. And when it's bullish and bullish, we are doing addition. If it's bearish and bearish, we are doing addition. Okay, similar candle, addition, and if it's negative candle, we are doing subtraction. Okay, so here I'm minusing this candle from this candle. So this is a bullish candle. Let me just color it bullish with green so that you guys don't get confused. Now, when we carry this green and we put it on this down candle, now let's pay attention to something. Now, you see the whole area that is painted green would become our wick. They will become a wick. Okay? They all will become a wick. So from this high here, down to this low becomes a wick. And you see those areas that the green, from the open to the close, not the high and the low, just the opening and the close. Remember, I've told you about time frame. When we're talking about time frame, we're looking at open to close. So when we overlay the green and we put it on the red, yeah, on the, when we overlay the bullish candle and put it on the bearish candle, you see the area that the bullish candle covered, that area is where we call those are the area that will be the wicks. And why are they weak? That is where orders pairing. Remember when I was teaching you orders in the market? I said bid and ask. That means that, you see, at this region here, both bullish and bearish have paired. It is balanced. Every bullish orders have been matched and every bearish orders have been. So if we had bullish order first before, that means bearish order have matched it. I'm sorry. If we had bid offer, that means ask offer is matched, and if we have asked offers, then bid offers have matched them. So this area is filled. We will dive deeper into this thing by the time we go into understanding MBM. In MBM, there's something we call inversions, and I'm going to use this to explain them. Please note that this is why I said follow up on the teachings from the start so that you not get confused. Hmm? So this area, this whole covered area, wherever the bullish and bearish area touch each other, that is our weak level, because those area, the orders there have been matched, they've been paired. They are settled transactions. And then you see the areas not covered becomes up the body. Okay, they become the body. From the body. Okay, they become the body. So by the time we now let's try to explain this. Let's separate this again. By the time we do the maths, 1 hour candle that is bullish and is another 1 hour candle that is bearish, do the minus, because bullish and bearish will minus them. On the 1 hour, on the 2 hour candle, it's going to give us a very long week. Why? It's going to give us week. Why? Because this, from this open to this close, those are areas where orders have been paired, where orders have been matched. This is areas where orders have been matched. They are completed orders. They are completed orders. So on the 2 hours, we would most likely see something like this. If we go to the 2 hours, something like this. Now, this thing works for every time frame. 1 hour candle plus 3 hour candle must give you 4 hour, must give you a story on the 4 hour candle that correlate. And this is how the daily time frame is formed. Combination of 1 hour candle, 2 hours candles, 4 hour candles, 8 hours candle, 6 hour candle, 1 minute candle, 15 minutes candle. All of them makes up what eventually happened on your time frame, on your daily time frame. And this is the reason why as traders, we don't trade candlestick patterns. So if in a scenario whereby both are bullish, okay, both are bullish, sorry. In a scenario whereby both are bullish, let me just make that. That means, remember, this is bullish, not bearish. So we're going to have to see something like price opening at somewhere around here. Yeah, at the close, open here, close here, open here, close here. Then we'll do addition. It's going to be addition. This plus this would equal this. So in this scenario, we'll be having a long bullish candle, very long bullish candle. The same thing for a bearish candle. Okay, let's imagine market open here and closed here, and this is a bearish candle now. Bearish candle, and then it's closed here. Then we'll do the addition, and it give us a long bearish candle. Okay, that, and then on the 2 hour time frame. Now, mind you, we are not calculating weeks. So any weeks that is covered by this addition is on the 2 hours time frame. We don't reference them. So let's try to see how this thing plays out on the chart. Okay, so I'm going to go to this chart for us, and I'm going to use example. Now let's go to the 1 hour chart, 1 hour candlestick. Yeah, so let's try to see this time frame here. So let's say this, the combination of, you see this is a 12, this is 12 o'clock candle, and this is 1 o'clock candle. That means we're looking at from 12 o'clock to 1 o'clock. That's a 2 hours candle. Is that feasible? Hold on. Okay, let's hold on. Yeah, let's do 11 to 12 o'clock. Okay, so that you guys will not be confused. Let's just keep it simple. So 11 to 12 o'clock. This is, I'm on the 1 hour time frame. You see it here? See it here? This 1 hour. Let's try to see what's happened. Since this is a bullish candle and this is a bullish candle, definitely we are doing addition, right? So we will have something like this from this low to this high. Remember, when we are only looking at the opening to the close. So this open to this close, and then this one opened immediately and closed here. So we are combining both candles. Okay, so I'm just gonna bring that out here. So based on what um we have seen here, it opened here and it closed here. Remember, we are merging these two 1 hour candle. So, and then we'll now go to 2 hour candle to see if I'm right based on what I've taught you. This is bullish candle, another bullish candle. Price opened here, price closed here, price opened immediately and closed there. So from this body, from this opening of this candle to the close of the next candle, yeah, because I mean, we are adding. So this candle plus this candle gives us this. Now, because of these wicks have been formed and these wicks have been formed, so I mean, it stood out among the time frame. Despite that we have added these two time frame, it does not cover this week and does not cover this week. So we go. Now there are rules for that. The rule is that, you see, when you are doing combination, the low in a bullish scenario, the low of this candle, yeah, the low of the two of them could be formed by either of these two candles, and the high could be formed by either of these two candles, because the second candle can open and then go lower before going up. All these things will explain why they happen, okay? So that you can use them to understand how to interact with price. But it's essential that you understand them so that by the time you are seeing them on your chart, you are not confused. So I'm teaching you candlestick combination, not candlestick pattern, how they work, time frame, so that we can understand how to be able to know when price is considered cheaper and expensive. Okay, and let's continue. So if I go to 2 hour time frame from 11 to 12, I will probably see something like this: a single candlestick with massive bullish body and a little bit of wick. So I'm just going to annotate that level so that I don't miss it when I go higher. Let's go to 2 hours. This 2 hour, and let's see that candle. Where's the candle here? Sorry, let me go back to 1 hour so that this thing can be big enough. Okay. So when I go to 2 hour, this what I probably would see. Okay, in fact, that's what I would see, not probably. So from 11 to 12. So let's go to 2 hours candle, 11 to 12 hour candle. Okay, the 11 o'clock candle. This is it here. See it? See the time frame here. 11 starts from 11. I'm on 2 hour now. See the same thing I explained to us here Is what happened here. Two candles that came together to form one candle on the higher time frame because of fractal. Okay, so that's how this thing now what is the importance of this thing, and how does it help us? As I will be explaining in our next class, this is how it helps us as traders. Let me explain to you. Do you know that the opening of this candle, this is the opening of this candle, and this is the opening of this candle? There is no difference, right? Both candle have low, high, and close. Both of them have open, high, low, and close. But the truth is that if you had purchased here, let's say for example, you place a buy order here, you would have made money, right? Than when you make more money than when you purchase here. And here is even cheaper than here. The point is that the higher you keep on looking for, the higher price keeps on going, and you keep on looking for buy opportunity in a bullish scenario, the lesser your chances of that thing being correct, as depicted in this next candle, which closed bearish. So it helps us understand that, okay, when exactly is cheap enough for us to enter, and when exactly is price expensive enough for us to sell. It also helps us explain that, okay, around this price point, we should be expecting a reversal, which is the weak low, and around this price point, we should be expecting the weak high. If you understand these things, I can then move on ahead to teach you daily time frame, weekly time frame, monthly time frame, and every other thing, because these things works together. They are technical. Okay. Now, I wanted to, what's there to say? Okay, yeah. Once we understand this, yeah, once we understand what I've explained to you based on candlestick understanding, candlestick knowledge, then once you understand it, then we are ready to now move on to understanding how what exactly happened that made this week to be created. What exactly happened that inside this body of this body here, what exactly happened inside? How can you engage them? Now that you understand them, there are ways we trade them. Of course, there are ways we trade them, and you will use it to make money. But we'll talk about all of them. But what I'm still doing is explanation. This is how bid offer and ask offer are being matched based on order flow. So at every week, once it is a week high, we know that order flow is what? Bearish. And when it is week low, order flow is bullish. These are simple things. Why did I say that? Because at every high is what's it called now? Bearish orders and bullish orders rather being paired to bearish order. So there are bullish limit orders at those points, and then the sellers come in to aggressively activate those orders, and then price starts dropping. And at every low, at every week low, these are bearish orders that get um, activated by bullish orders. All these things are and this is the rule of weeks. That's what happened at weeks. What of in the body? What happens? We'll move to there. How do I know that, okay, this bearish order is ready to be matched into bullish order? I will teach you. How do I know that this bullish order is ready to be matched to bearish order? I will teach you. How do I know the current order flow? I will teach you all of them. Just relax. Just relax. I mean, this just January 3rd of 2025. We have a lot of time to spend together. Relax. But you need to understand first. I cannot just come here and say, when you see a candle that do like this, and then you do like this, it's saying this, it's saying that. No. Knowledge first for anything, okay? So in our next class, I'll be diving deeper into helping you understand candles. How you see now that we have understand what candle is and how the rules of candlestick, now we can go deeper into understanding candlestick combination as per time frame. And now we can go deeper, and in our next class now, I'll be showing us how candlestick shows you orders, the orders and how these orders move. Now that we understand time frame, because if you don't understand this time frame, I cannot even teach you lower time frame or higher time frame. I cannot even teach you reference or anchor, because there's something in MBM we call the anchor candle or anchor time frame. We use them. Dear traders, please um, please pay attention to the classes, and and um, I'll meet you in the next class. Okay, so this is all I have for now. Okay, to meet in next class. I don't want these classes to be very very long, and so next class I'm gonna drop it. Thank you guys.